That mean old reversion. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 29th, 2021. And man, here's the daily chart of the S&P 500, and it's pretty interesting. You know, we had been pulling back for about a week, and then Friday we had a really strong day. You can see it on the SPY ETF here, it pushed up toward a new high. The SPY did not put in a new high, but you see it reversed right off the 50-day moving average right into Ichimoku cloud. This heavier white line is the 200-day moving average, and there's, you know, a good body of evidence that the market, that this is kind of the mean, and the market reverts to the mean over time. And there's a kind of a case for that. If you look at this line I've drawn down here on the price oscillator, which is showing price momentum, you can see even as the market has pushed on to new highs, the momentum is diminishing, getting smaller and smaller and smaller. That's called bearish divergence. You know, the momentum is diverging from the trend. And when we look at this bearish divergence, along with the fact that we've been above the 200-day moving average and price tends to revert to that mean, it builds a case for, you know, a reversion, a correction back at least to this mean. You see we came pretty close last fall here and here, and in the early summer actually came down to it. So is that going to happen? Yeah, there's a lot of things in play. And we'll see. Pretty good article here from Cnbc, and the author I think raises the important points. So this is CNBC. It says the end of the quarter could create volatility for the markets in the week ahead. Author's Patty Dome, and the key points here. Hey, we're ending the quarter, the first quarter, this week, and that could cause some market volatility ahead of the long weekend. It's not just the quarter ending, but we've got the March employment number coming out on Good Friday, this coming Friday. There's an expectation for some pretty strong job creation. You know, the president's now moved on from COVID relief and is talking about a very, very large infrastructure plan. You know, that's going to take a while to get worked out, but the market's going to be watching that closely. And probably the most important point here is this idea of market rotation and money moving into cyclical stocks over growth and tech, and the fact that mutual funds at the end of the quarter, several of them, according to their prospectus, are going to have to rebalance and, you know, move money from, you know, one stock into another to meet their prospectus, you know, guidelines. So, man, it's tough. It's a stock picker's market. Even if we do go on to, you know, eke out some incremental new highs, we still got this bearish divergence. So I don't think there will be dramatic new highs, and at some point, you know, we'll revert to this mean. You know, will be this week, you know, probably not. But there's a lot of factors, and we just got to be diligent. You know, this is, you know, when the market's trending hard in a direction up or down, it's a little bit easier to trade. You know, when it's doing this, it's losing momentum, it's a little bit sideways, it gets a little harder to trade. But there are trades out there, particularly as we pay attention to this idea of sector rotation. And so on Friday, you know, as the market was roaring up pretty good, I actually took a short trade on CBOE, because this one's heading down and we're in a little bit of profit on that. And I took another long on Procter & Gamble. And, you know, I got in this blue line, it popped up nicely. And this is just indicative of this idea of sector rotation. And so I'm paying attention, watching for individual trades. I think that's where the action's going to be. The indexes look like, you know, again, like I showed you on the SPY, loss of momentum, a little back and forth, maybe a reversion to the mean. So as we watch sector rotation, there should be some setups in individual stocks up or down. And, you know, trading's never easy. Times like this, it's even a little bit harder. But, you know, we got a trading plan, we follow it, we got setups we use risk management, and we just try to make the absolute best of it. A sector that I'm particularly interested in is the semiconductor. I'll show you the ETF for the semiconductors, SMH, right? It had some real strength through most of the year, had a pretty good correction, and now looks like it is heading up. And there's some individual symbols, you know, within this SMH ETF. You know, it's made up of about 25 semiconductor companies, all the big ones, NVIDIA, Micron, so on. And I think there's potentially some good long plays there. Not quite ready, but I'm watching close, and I'll pull the trigger when we get ready. And I'm watching gold, watching the dollar, watching interest rates, you know, unemployment, GDP. There's a lot of moving parts here. But ultimately, we try and keep it simple. We just look at charts. And then when there's a good setup, we take a trade. So that's what we're doing here at followmetrades.com. And as we end the quarter and, you know, options expire and all this stuff's happening and funds got to rebalance, it could cause some volatility. So we'll see how it plays out. It won't be dull, that's for sure. If anything changes, I'll send another update, but that's where we stand for now. All right, thanks.